What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC finally getting that daily close over the $16 level just yesterday. I wasn't able to make a video today, moving pre-market only to get heavily shorted, slapped down, and manipulated as if it was a low float small cap stock. In this video, I want to cover two specific things when it comes to AMC. One, regarding the options chain, and also, that breakout. Is it still validated? Did it get invalidated? We're going to talk from a technical standpoint. I also want to talk about Netflix earnings. It's going to be a very good lesson. I'm going to break everything down for you and exactly what I was seeing. So let's get right into it. First off, right now, Netflix is popping after hours after their earnings was released. Now, Netflix earnings was a very popular topic between all of FinTwit. You heard a lot of people talking about puts. There was a select few, saying they're going to go against the grain, but a majority, from what I saw, were heavily weighing towards puts. It really reminded me of Facebook after they reported Q4 and absolutely tanked. Okay, when Q1 came around, everybody was bearish, and it was just too easy, to see that it was going to move to the upside. Okay, and that's exactly what you're seeing happening with Netflix. Now, if you look at the earnings in just a brief overview, it definitely wasn't a smash out earnings. Okay, they beat on their earnings per share. They lost a little bit on revenue. Their global streaming, subscribers gained just 5% year over year. They made some revisions to third quarter. They are going to see a little bit of a slowdown. It does expect to see a little bit of a miss on their earnings per share, as well as a little bit lower than expected revenue. So by no means was this a bomb to the downside of earnings, absolutely horrible. Okay, but it definitely wasn't, a very good earnings. So there's twofold. Okay, why is, Netflix popping to the upside? First of all, don't forget, okay, earlier this year, this was trading at $700. Okay, it seems like, yes, what is low can definitely go lower, but it comes to a point to where it's just like, it's got to make a move to the upside. But even more important, all right, the amount of call flow on Netflix was insane. Now I'm showing right now 60% to 40%. Okay, 40% calls as of right now, but this has vastly changed. Okay, it's updated every couple minutes. But earlier, just today, there was over 70% or 72%, of put contracts, and the put contracts were very, very small, meaning 10, 5, 15, 20 contracts. Okay, some of them were $100 dollar strikes, 120 strikes. And it's a very good indication that is retail. Some of the call side was massive. Okay, we're talking 1,000 contracts, if not more than that. Okay, some of them were deep in the money. That's always a good indication that those are large funds buying those. So my point behind all of this is, when some things get to be a little bit too much of a sure thing, it's very common for market makers, okay, to just absolutely shred the other side. Meaning, when one side gets too crowded, okay, it just seems too easy for things to move the opposite side. And it's exactly what you're seeing with Netflix. Now, I did not take any calls on this, and I explained my reasoning behind this to everybody inside of the group. Is that the premiums were so high, by taking a look at this IV number of 231% right now, that we would need to see a massive move. And it was pricing in a $34 move towards the end of the day. So if you purchase, let's say, $240 calls for this week, and you purchased it right at the end of the day when that $34 implied move, okay, was validated, even if you open up at 217, which is trading right now, which is what, about a 8% move to the upside, chances are you're going to be down on those contracts because the implied move was so much greater, right? That's also known as pinning, where market makers will pin a price in between those two lines of the implied move. So we're talking about 235 and then all the way down at about what 167. Okay, and when it pins in between, anywhere in between that, it really just steals premiums from both sides. So if you did play Netflix and it did work out for you, if you bought it already at 180, you rode it up, you rode the IV, increasing IV to the upside, you cashed out before, whatever you did, you made money on the play. That's awesome. Just want to explain, pretty much what is happening, after Netflix did release their earnings. And this does coincide a little bit with AMC. So let's take a look at AMC's chart as of today. All right, even just like the past few days, nice move to the upside. We had a nice move yesterday. We finally got over that $16 close. I will look quickly and show you what I'm talking about on the daily chart. All right, zoom in a little bit. You could see that we had that resistance. all the way back from the end of May. Once again, resistance, okay, on the 12th, we made, we rode, the 9 EMA, making that higher low. We got the break over the 16, and then here we are only to get shut down. When you take a look at the 5-minute chart, I look at this chart and this reminds me, like I said, of a low float, small cap that is just completely controlled by short sellers, by market makers manipulation. Okay. And clearly, as you can see right at the open, and I said this to everybody, be careful if you're going to buy calls at the open, because it just seems like this is way too much of a common occurrence, specifically for AMC. The 5-minute candle is just, a massive wick to the downside, complete red. And it just was a slow fade. Once it broke under that, at 1685, it slowly faded to the downside. And that also coincides with what I was just talking about with Netflix, is the amount of, call buying in small blocks. Okay, this number once was about 82%, 81% at the open, and like I said, a lot of that were small blocks as well, which gives power to the market makers. They see that it's retail, and they're able to pull the price down and get it to exactly where it wants to be, in order to be able to steal most of as much premium as they can. Now, let's talk about where it stands. Are we still over that $16? Well, yeah, we closed at $16.36. The play is still validated. A lot of times when we talk about these breakouts, okay, these levels, especially if they've acted as resistance numerous times, like it has over in this area, okay, it did again end of May, and then multiple times over here as well. A lot of times once it breaks above that, well, now we're going to be looking for old resistance to becoming a new support. All right, so it's the same thing. You're going to want to see that $16 level hold. Beneath that will be about that $15 level in order for the move to continue to the upside. Okay, now we do have a little bit of speculation and a little bit of news, all right, that Adam Aron had stated, okay, before, August 4th, when they do, release their earnings, as well as GameStop with the split taking effect. Now, one thing I am excited about for GameStop is, because these stocks do move, okay, from sentiment, and I've talked about this with GameStop more specifically because of its float, it's just easier to be manipulated. If you look at the volume today, 3.2 million shares, okay, which is its daily average. AMC was somewhere, I think, around like 40 million. I want to say it was, 50 million shares traded. So it's easier for them to manipulate GameStop. And I'm hoping that evens out just a little bit with their float being a little bit higher and at much more of an attractive price point. Okay. But as you can see, some of the sentiment, is clearly resembled from AMC. So this still stands, like I said, it's 22nd. I believe the split will go into effect. Okay. And then we have up until August 4th until their second quarter earnings. Now it's still moving nicely, like I said, to the upside from where it stands. However, we want to hang over this level before the shorts will continue to capitalize. So guys, that is it for this video. See you in the next one.